Value investing is simple. It's about finding bargains in the stock market. The essence of value investing lies in identifying stocks that are trading for less than their intrinsic value. This means looking for companies whose stock prices do not reflect their true worth. You want stocks trading below their real worth. These are often companies that have strong fundamentals but are currently undervalued by the market. Think of it like buying $1 for 50 cents. It's about getting more value for your money. This approach requires a keen eye for detail and a deep understanding of the market. Value investors look for these opportunities. They meticulously analyze financial statements, earnings reports, and other key indicators to find hidden gems in the market. They want strong companies with good fundamentals. This means companies with solid earnings, low debt, and a strong competitive position in their industry. These companies may be overlooked by the market. Often, they are not in the spotlight and may be ignored by mainstream investors. They might be out of favor. This could be due to temporary issues or market overreactions that have driven their stock prices down, but their low price doesn't reflect their true value. The market may have misjudged their potential, creating an opportunity for savvy investors. That's where the opportunity lies. By buying these undervalued stocks, investors can benefit when the market eventually recognizes their true worth. Value investors buy low and wait for the market to recognize the true value. This strategy requires patience and a long-term perspective. Value investing is a long-term game. It's not about quick profits but about building wealth over time. It requires patience and discipline. Investors must be willing to hold on to their investments through market fluctuations and not be swayed by short-term trends, but it can be very rewarding. The potential for significant returns is high when the market finally acknowledges the true value of these investments. Just look at Warren Buffett. He is one of the most successful value investors of all time. He's a master of value investing. His disciplined approach and long-term perspective have made him a legend in the investment world, and his track record speaks for itself. His success is a testament to the power of value investing. ETFs are changing the game. They're like mutual funds, but they trade on an exchange. This means you can buy and sell them throughout the day, just like stocks. ETFs hold a basket of assets. This could be stocks, bonds, or commodities. One of the best things about ETFs is diversification. You get exposure to a variety of assets in a single investment. This reduces risk. Don't put all your eggs in one basket. ETFs help you spread your money around. ETFs are also very cost-effective. They typically have lower fees than mutual funds. This means more money in your pocket, and who doesn't like that? Value ETFs are a specific type of ETF, designed to help investors find hidden gems in the stock market. These ETFs are particularly appealing to those who are looking for long-term growth and stability. They focus on stocks that are considered undervalued by the market, offering a unique opportunity to buy low and potentially sell high. They focus on value stocks, which are shares of companies that are trading for less than their intrinsic value. This means that the market has not yet recognized their true worth, providing a chance for savvy investors to capitalize on this discrepancy. These ETFs track indexes that are designed to identify undervalued companies. By following these indexes, value ETFs can systematically pinpoint stocks that have strong fundamentals but are currently underpriced. They use metrics like price-to-earnings ratio, PE, and price-to-book ratio, PB, to evaluate the value of a company. These financial metrics help in assessing whether a stock is undervalued compared to its earnings or book value. Think of value ETFs as a shortcut to value investing. Instead of spending countless hours researching individual stocks, you can invest in a value ETF and gain exposure to a curated selection of undervalued companies. They do the research for you, analyzing various financial metrics and market conditions to find the best value stocks. This makes it easier for investors to make informed decisions without needing to dive deep into financial statements. They identify the undervalued companies and bundle them into a neat package. This allows you to invest in a diversified portfolio of value stocks with just one purchase, spreading your risk across multiple companies. You get access to a diversified portfolio of value stocks with a single investment. It's that easy. This diversification helps to mitigate risk, as the performance of your investment is not tied to a single company. There are many different types of value ETFs, each with its own unique strategy and focus. This variety allows investors to choose ETFs that align with their specific investment goals and risk tolerance. Some focus on specific sectors like healthcare or financials. These sector-specific value ETFs allow investors to target industries they believe have strong growth potential or are currently undervalued. Others focus on specific regions like the US or emerging markets. Regional value ETFs provide exposure to undervalued stocks within a particular geographic area, offering opportunities to benefit from regional economic growth. And some focus on specific factors like dividends or low volatility. These factor-based value ETFs cater to investors looking for steady income or reduced risk, making them a versatile tool in any investment strategy. Section 4. Advantages of value ETFs. Value ETFs offer several advantages for investors. First, they provide instant diversification. You get exposure to a basket of value stocks with a single investment. This reduces risk and can help smooth out returns. Second, value ETFs are very cost-effective. They typically have lower expense ratios than actively managed mutual funds. This means more money stays in your pocket, and over time those savings can really add up. Third, value ETFs are very tax efficient. They generate less taxable income than actively managed mutual funds. This is because they trade less frequently, and less trading means fewer taxable events. Section 5. Top Value ETFs for 2025. Looking for top-performing value ETFs in 2025? Look no further. In this video, we will explore some of the best value ETFs that you should consider adding to your portfolio. Value ETFs are a great way to invest in companies that are undervalued by the market but have strong fundamentals and potential for growth. They offer a balanced approach to investing, combining the potential for capital appreciation with the stability of established companies. Here are a few to consider. These ETFs have been selected based on their performance, expense ratios, and the quality of the underlying assets. Each of these funds offers a unique approach to value investing, catering to different segments of the market. Vanguard S&P 500 Value ETF, VOOV. This ETF is designed to track the performance of the S&P 500 Value Index, which includes large-cap value stocks in the US. These are companies that are considered to be undervalued relative to their peers, offering a great opportunity for long-term investors. This ETF tracks the S&P 500 Value Index, which includes large-cap value stocks in the US. The fund focuses on companies with strong fundamentals, such as solid earnings, dividends, and cash flow, making it a reliable choice for conservative investors looking for steady growth. Vanguard Russell 2000 Value ETF, VTWV. This ETF is designed to track the performance of the Russell 2000 Value Index, which includes small-cap value stocks in the US. Small-cap stocks often have higher growth potential compared to large-cap stocks, but they also come with higher risk. This ETF tracks the Russell 2000 Value Index, which includes small-cap value stocks in the US. These companies are typically in the early stages of growth and can offer significant upside for investors willing to take on more risk. Vanguard Consumer Staples ETF, VDC. This ETF is designed to track the performance of the MSCI US Investable Market. Consumer Staples 25/50 Index, which includes consumer staples stocks in the US. Consumer staples are essential products that people use daily, such as food, beverages, and household items. This ETF tracks the MSCI US Investable Market Consumer Staples 25/50 Index, which includes consumer staples stocks in the US. These stocks tend to be more stable and less volatile, making them a good choice for risk-averse investors looking for consistent returns. These are just a few examples of the many value ETFs available to investors. Each of these ETFs offers a different approach to value investing, allowing you to diversify your portfolio and reduce risk. Do your research and find the ones that best suit your needs. Remember, investing in ETFs requires careful consideration of your financial goals, risk tolerance, and investment horizon. Happy investing. Section 6. Navigating the market in 2025. The market is always changing. It's a wild ride. But don't let that scare you. Value investing can help you navigate the ups and downs. Remember, value investing is a long-term game. Don't panic sell when the market dips. In fact, market downturns can create buying opportunities for value investors. When prices fall, it can expose undervalued companies. This is where value investors can find the best deals. Diversification is key. Don't put all your eggs in one basket. Invest in a variety of sectors and asset classes. This will help reduce risk and protect your portfolio from market shocks. Section 7. Conclusion: ETFs, a powerful tool for value investors. Value investing is a proven strategy for long-term success, and ETFs make it easier than ever to implement a value investing strategy. With their low costs, diversification benefits, and tax efficiency, value ETFs are a valuable tool for any investor. Remember, investing is a marathon, not a sprint. Stay focused on your long-term goals, and don't be afraid to buy when others are selling. That's the mark of a true value investor.